Welcome, everybody. Good morning. And really glad to be here with you again. Today, I want to talk about day trading strategies for today's markets. I think 2018 is going to be a very, very active year. Whether the market goes up or down, and I think you're going to see a bit of both. I think there's still a lot of upside left in this market, but I do think we'll see a pullback at some point. And I think it's going to be extremely active. So I thought I'd share a day trading strategy with you that has worked well and that I think you'll get a lot of use of in 2018. So welcome once again. Please do remember that trading can be risky. So please don't trade with real money until you are completely comfortable with the system that you are using. Now, as Renee said, I am Vince Vora. I'm the head trader here at Trading Wins. I have been doing this for a little over 30 years. And throughout that time have developed several strategies and trading systems, one of which I will share with you today. So what will you learn today? Well, we're going to start off by talking a bit about the challenges of day trading. If any of you have tried it in the past, you'll know what I'm talking about. But we'll start off with that, and then we'll move into what I believe are the 4 keys to day trading success. Without these 4 items, I think you'll have a very difficult time succeeding. So we'll talk a bit about that, and then we'll go through the strategy step by step. I'll bring up my charts. We'll set up the layout and walk through the long entry, the short entry, what we're going to use as an exit strategy, the complete system from start to finish, and then, of course, if we have any questions, or time for questions, I'll be more than happy to answer them for you. So let's start off by talking about the challenges of day trading. I love this image because for most, at times anyway, day trading can really feel like this. But the key here, and the point I really want to get across by the end of this, the time that we have together today, is that day trading does not have to be this scary or this difficult. In fact, it can be just as easy as trading on a higher time frame. You just A, need to know what pattern to look for, and B, need to build the habits to be able to follow your plan consistently. So out of curiosity, how many of you have actually tried it before? And how many of you have failed? Please be honest. There's no shame in it whatsoever. We've all been there. None of us are born a trader of any sort, whether it's a day trader, a swing trader, an investor. It's all something we have to learn, and we all have to start somewhere. So, again, it can be difficult if you don't know exactly what to do or how to follow it, and don't build those habits. So let's go right into the 4 keys to day trading success. I think if you follow these 4 items, you actually will do quite well. So the first one is discipline. Now, this is what most traders struggle with. And what are we really talking about here? Because obviously, it's human nature to bring our emotions into trading and get excited about something, get disappointed, basically go on an emotional roller coaster. And it's very difficult to stick to a plan when we do that. What I'm really talking about here is sort of getting down to the mechanical level. And in other words, finding a pattern that consistently repeats itself. Doesn't matter what year you're in, what time frame you're trading, what kind of market you're in. It's a pattern that repeats itself consistently. And I'm going to share that with you today. But what this is about is building the habits to just rinse and repeat. So in other words, your job as a trader is to spot that pattern and then act on it. And the key is acting on it consistently. And hopefully, as we go through this, you understand exactly what you have to do, and then walk away and start building those habits. Focus is extremely important. When you sit down to trade, the mistakes happen when a trader is not completely focused. In other words, many of us sit down, multiple monitors, TVs, radios, you got CNBC going on one, Bloomberg on another. All these things are great for information, but they can also be a huge distraction. What you want to do is be able to focus. You want a clear mind. You want to feel good when you're trading, and you don't want distractions. So clear your distractions, turn your TV off, and focus on your one screen and just look for that pattern. That's all you have to do. As you get more and more experienced, you'll be able to, turn on a TV here or radio in the background and not be as distracted. But at the beginning, you really do need to shut off all distractions and really, really focus. Now, most people, when they think about day trading, they associate it with risk immediately, and for good reason. Because it can, if you don't do it the right way, it can be very, very risky. Okay, usually with risk comes reward, and that's where the problem starts. Most people are only focused on the reward, right? How much money am I going to make? How big of a move am I going to catch on this stock? That's the wrong way to do this. Okay, and you're going to hear me preach about this over and over and over again. But your job as a trader is to simply follow your plan, which is to spot that pattern that I'm going to share with you, and then make sure that you're following your rules, money management rules, entry rules, exit rules. That's it. You need to focus on this and look at it or approach it from the standpoint of execution. If you can just execute your plan, okay, that's all you need to do. So you need to rate yourself not on how much money you make or lose. You need to rate yourself on how consistently are you following your plan. You need to make a checklist of the items you need to see on your chart before you enter a trade, along with a checklist of what you need to see to exit that trade, okay? And if you can tick off every box on both ends, that means you're doing everything correctly. And if you're doing that consistently, the money will come, okay? The success will come. And last but certainly not least, you need to think strategically. And this again comes back to the plan. This isn't, outguessing the market in any way. I mean, that's really what ends up happening as a result. But what I mean is, before you enter that trade, you know exactly where you're going to enter and how you're going to enter it. You know exactly where you're going to put your stop. You know exactly what your exit strategy is. In other words, you're prepared. That's what this is really all about. You don't want to be caught by surprise no matter what happens once you're in that trade. So you need to plan ahead, okay, and execute your plan. If you can do that, you will do very well, okay? So again, it comes down to tracking your trades as well. Once you do start placing trades, whether they're paper money trades or real money trades, doesn't matter. But once you have some trades, what gets measured, it gets done. In other words, you go back and look at your winners, go back and look at your losers, split them up, all right? And I bet you'll find some very, very common items there. On the winners, you did everything that you were supposed to do. And on the losers, well, you skipped a little box or two, right? You overlooked some items that you needed to have checked off before you got into those trades. That's usually how it happens, okay? If you're doing everything absolutely right and you're still losing more than you're winning, then we need to go back and look at the plan, right? And tweak the plan. But that's why it's always great to start off and test your strategy using a paper money account. Forget the fact that your emotions aren't necessarily coming into play. You're going to go from that paper money account to a real account with a small amount of money, okay? And test again. And then you can easily scale it. That's the easy thing. Making up for lost time in trading is so easy, because once you have a system down that works for you, to scale it is so easy, all right? And consistency is the key no matter what. You have to work that plan, build those habits. I'm sure you've heard, if you can go 28 days doing the same thing, the same routine, you've just built a habit. And that's what you should do. Practice putting in a trade and checking off those items on the entry list, checking off the items on the exit list. If you can do that consistently for 28 days, again, That's how you become a specialist, and that's what you need. And the other point about this becoming a specialist that I want to make is you don't have to learn everything about day trading. You don't have to look and take advantage of every single opportunity out there. You want to find the one or two things that works for you. So I'm going to share a strategy with you today. You don't need to use that one. You can use a part of it. You can use the whole thing, whatever works for you, but you need to find that one thing that works for you and then just rinse and repeat. That is really the key. Now, let's start talking about how you get prepared for your day when you're day trading, and then we'll move on to the strategy. So there's pre-market and there's after hours trading. I don't want you to trade during that time. For me, there's never enough volume there, and sometimes you get a lot of erratic movement based on the low volume. What I use this for is to get up to speed on the major news stories of the day, whatever will or could move the markets that day or move individual stocks. That's really what you're looking for here in pre-market and post-market is what are you likely to trade once the market does open, right? So things like economic data releases, news stories on stocks, maybe it's an earnings announcement, that sort of thing, you know, an analyst downgrade, an upgrade, that sort of thing. And you can go to many sources. You can read newspapers like the Wall Street Journal, like Investors Business Daily, which is a great paper. You can watch CNBC, Bloomberg, any of those, or visit some sites. A couple of these are my favorite. Investing.com, especially for the futures. Once you go to investing.com, just click on the tab at the top that says it has the index futures, and that'll give you an idea of where the markets are going to open up and how active they're going to be. So if you see that the Dow is up 10 points pre-market, or NASDAQ is up 3 points, that's not pointing to major activity there. But, you know, if you see the Dow up 100, you know, NASDAQ up 50 pre-market, you know there's going to be movement that day. So you know which group of stocks you want to focus on, okay? After hours, very similar. You want to look at the major stories or announcements that could impact the following day. And more often than not, it's earnings related. So if NVIDIA, Apple, Amazon report earnings after market close, you want to make a note to have a look at how those are performing pre-market the next day and how active they are in the pre-market, you know, what to expect, a gap up, a gap down, that sort of thing, and then go from there. So let me bring up my charts and let's get started. First of all, one tip, no matter whether you're day trading, investing, swing trading, it doesn't matter. You should focus on stocks or any instrument, futures, forex, that are trending strongly in one direction or another and that are very, very clean. If you can see here on DHI, every candlestick is pretty much the same size, very orderly, very predictable. This is what's going to make trading easy for you. Have a look at CBOE, probably the best looking chart out there. I mean, it's so clear and easy to recognize in which direction this move is happening, and then to find entries. Well, that's where the strategy comes in, and that's a few indicators that are going to tell you exactly where to get in and where to get out. But this is the kind of thing you want to focus on. You do not want to look at a stock or an index or a futures contract or a forex pair that looks like this. This is going to make trading a nightmare for you. Reason being, no matter where the strategy will get you in, your chances of getting stopped out are extremely, extremely high. All the volatility, all the back and forth. So movement is good. Erratic movement like this is not, okay? So you always want to trade a clean, predictable chart, all right? That'll help you no matter whether you're a big beginner or you've been doing this for a while. So let's start building the layout. There's a number of indicators that we're going to use for this strategy, and we're going to start off with a simple one that I use in every single one of my strategies, and that is a simple moving average. And we are going to use the 20-period simple moving average. Reason being, we use it for momentum. Now this one is probably the most widely used moving average out there, not just by retail traders, but also by professionals, and for good reason. It gives us a real good indication of momentum. Now, momentum can be judged in one of two ways. You can look at the slope on the price bars themselves, right, which is great, but you can see that the 20 does a real good job of drawing that in for you anyway. Well, where it really helps is on these retracements or pullbacks. When the price starts to drop, we could easily think that this is now downward momentum. But if you have the 20 on your chart and you see that it barely moves, in other words, it maintains its slope here, that helps us recognize that this is a temporary pullback before a continuation of that trend. So that's really where it comes in handy. So we're going to be using that to judge momentum, okay? Another indicator that we're going to throw on here is an indicator that we call the Ichimoku Kinko Hyo indicator. On Thinkorswim, it's just known as Ichimoku. Now, this one has many different lines with it. They're all moving averages, but they're calculated slightly differently. But putting the whole indicator on kind of creates a bit of a mess and makes the chart difficult to read. So what we do is go in here to the settings. I will say we do use the default settings of 9 and 26, okay? We are going to use that, but we want to remove those extra lines. We only want the shaded area, the cloud. So the Tenkin, the Kijin, and the Chiku lines, we're going to uncheck the show block plot button here. If you're using Metastock, you want to go into the settings and make them invisible. If you're using any other software, what you can do is change the color of those lines to the same color as the background of your chart, and they'll disappear. So the span A and span B is all we want there. All right. And so now we have a nice clean chart with just a cloud. And the way we're using this is for trend. If price and the moving average are above the cloud, that's an uptrend. If they're both below, that's a downtrend. If one or both are overlapping the cloud, we do not want to trade during that time. Okay, very, very clean and simple. So now in a split second, we can tell whether we have trend and which direction it is, and whether there's momentum behind that move. Okay, next we want to throw on a CCI, the Commodity Channel Index indicator. Now, this one normally has a default of 14. We want a much more responsive CCI, so we're going to throw a 5-period CCI on our chart. Okay, and and we're going to remove the oversold and overbought lines. We're going to use one of these and put it to 0 here. Give me one moment. Let me try to knock that down. And then, actually, you know what? We're just going to remove both of those and leave the 0 line here. Remove those. Let's see what that looks like. Actually, let me change the color on here. We'll leave it. Let's see it. There we go. Okay. So now we have a CCI, and all we care about is whether it's above or below that 0 line. I'm actually going to change that 0 line into a solid line so you can see it a little better here. Okay. There we go. Now, and I'll explain how we use the combination in just a second. There's a couple more I want to throw on. And next is the MACD. Now, the MACD, I like to use the histogram version, but again, with different settings. Normally, the default is 12, 26, 9. I'm going to change these dramatically. We're going to go to a 4, a 5 period, and a 13. So instead of 12, 9, 26, we're going to go 4, 5, 13. Okay, 4, 5, 13 on the MACD histogram here. There it is. Let me try to thicken it up a little so we make sure that we see it clearly. There we go. So now we have one other indicator that will be used as an exit strategy. But let's start off here with identifying the entries. So what we want to do is we only want to trade stocks that are nicely trending, you know, clean charts with momentum on our side. So if we look here on MAR, looking at the far right, we can say we definitely have an uptrend. We're clearly above the cloud with both price and moving average. Also, we have a nice slope upward here on that 20-period moving average. So that's nice, strong momentum in our favor, which is great. So now what we want to do is come down here, and we want to make sure we want to enter when both of these indicators move above the zero line. Now, they don't have to move above the zero lines at the same time. So if I'm going to just zoom in here and look back, follow my crosshairs here. When the MACD, you can see, went from below zero to above zero, okay, here, the CCI was already above zero. So you want to find that point, that first bar, when both are above zero, okay? So back in here, it was this bar here, right in here, the November 14th bar. The MACD went from negative to positive. The CCI was already there, okay? So all you do is you find that spot and you mark the high of that candle, and on a trade above it, as long as you still have momentum, okay, as long as you still have slope, on a break of that high, and I don't usually wait more than 2 candles, right? That's your entry. 1 tick or 1 penny above the high of that setup bar, which is right in here, you enter, okay? And that's usually what you see. Now, your stop, once you enter, once it triggers, would go just below the most recent pivot low here. So a very, tight stop in most cases. It's usually 1 or 2 bars behind. A very tight stop, but with the potential of a nice move higher, okay? Very clear. If we go back, and you can see all along here, there were areas to enter. When we go from negative to positive here, right? Mark the high, and the CCI is already above. That's the key. Mark the high. If you get a trade above it, your stop goes just below the most recent low. You go long, and you're in that trade, okay? Now, one key thing that I want you to focus on is when price and the moving average go from one side of the cloud to the other with a slope already in place. Some of the biggest trades happen on that first pullback. So when you've just crossed from one side to the other and you get that first pullback in that first setup, those are usually very, very nice trades, okay? So where do we exit? Well, that's where another simple indicator comes in, and we're going to throw on and use a popular parabolic SAR, okay? But the setting we want on the parabolic SAR is 0.02 and 0.2. Make a note of that, because on some platforms, it is 0.08 and 0.9. You want to change that to 0.02 and 0.2 on the parabolic SAR. And what this is going to do is put on these little dots here for us. What these do is they act as a trailing stop. So the level where the dot is, the price level, that's where your stop is going to be moved from here to here, okay? You also want to make sure that whenever you get your entry, whenever your entry is validated, that the dot is below that candle for a long trade or above it for a short trade, okay? So you want to confirm that that's also in line with the CCI and the MACD. You go long and you just stay long until price breaks below that level. So you can see here was the most recent little dot here below. And then when this bar went through it, the dot now changed and appeared above, okay? Your stop would have been here. So your entry was here at 111.68. Your exit was up here at 120.37, okay? Now, I'm showing this on a daily time frame. It doesn't matter what time frame. This is more geared towards the intraday. Okay, let me show you the 5-minute. So here, let's go in this section here, the most recent one. When you get that cross, that's what you want. You get that cross with slope. Let me zoom in here just so we can see the MACD clearly. Okay, you cross the cloud with slope. You get that pullback. Okay, And on that first green candle here on the MACD, if the CCI is in line and your parabolic SCR dots are below, that's your setup candle. When you break it, okay, you go long. Now, you do want momentum on your side, remember? So here, momentum was flat. The 20-period moving average was flat. So we would have skipped it. But on this pullback here, right in here, look at momentum, sloping nicely higher. When we go totally green here on the MACD, CCI is in line, the parabolic SCR dots are below, that's your setup. You mark the high here. It's actually this candle here. Stop goes just below the most recent low, and boom, off it goes, okay? And you can see what it did next. It just took off. So here it would have got you out here and then back in before this climb. So again, the time frame doesn't really matter. Let's quickly look at the short setup. I'm going to use crude oil, and I'm actually going to use it on 1 minute chart. Who trades 1 minute or 5 minute? It really doesn't matter. You can trade 15 minute. The settings, Sue, yes, the settings are also good for longer term trades, but because the CCI is a 5 period, it actually performs better on the lower time frames. You can use this on the higher time frames too. It still works very well. You may want to experiment by increasing the CCI slightly, depending on how much longer term you go. You know, daily is one, weekly is another, monthly is another. But let's quickly look at crude oil here on a 1 minute chart. Remember, focus on the move from above to below, okay? Or the other way around, doesn't matter. But when a price comes through the cloud and that 20 is already sloping, look for that first pullback, that first retracement, okay? And then that first time when the MACD in this case goes negative, when it goes below zero. So it went from green to red here. The CCI was already below the zero line, right in here. So this red candle was your setup candle. Now, here's the thing. We still don't have the dots above, right? The dots are still below here. So what you actually want to do is wait for that first candle where everything is in line, meaning the dots are above, the CCI is below the zero, the MACD is below the zero. So it'd actually be this candle here, okay? Then all you do is mark the low of that candle, and once you get that break, off it goes. You go short, and you can you know, buy a put option, you can sell short the stock, you can sell a call credit spread, however you want to do it, okay? But TJ, yes, it's a 20 period simple moving average, correct, based on the close. And so it really is a simple thing to spot on your chart, okay? It takes a little practice to remember the rules, but remember, you should have your checklist beside you. So one of the items on your checklist is, you know, the parabolic SCR dots on the right side of the candles. The CCI on, you know, for a long trade above zero, below short trade below zero. Same with MACD. Each one of those is going to be a separate box for you to check off. And once you can check off everything, you're good to go. But you got to remember, what's very, very important is that you follow trend and momentum. So for a short trade, you're only going to take setups below the cloud that have a down sloping 20 period moving average. For long trades, you're only going to take trades above the cloud that have an upsloping moving average. Here we cross back above, right? Once that moving average starts sloping and you get that pullback and everything falls in line, the dot, the parabolic SCR below the candle, the CCI above zero, MACD above zero, that's your setup candle right here. You mark the high. Once you get that trade above it, you go long and off it goes, okay? Now, of course, you have to watch the clock, okay? And when you're day trading, especially on a 1 minute chart, right? If it's right at the close, you're not going to take it. But there's some key time periods for you to look at for day trading. The best times of the day to trade are really from 10 a.m. to 11:30 a.m. Eastern, and from 1:30 to 3:30 p.m. Eastern. So usually between 11:30 and 1:30, the lunch hour, it's actually more like 2-hour period, you'll see things settle down, which will create opportunities going into the afternoon. But I want to share one more thing with you, and that's an opening range tactic that you can use. And this is almost like a strategy in itself, okay? So let's look at, we're going to keep a 1-minute time frame here, and let's go back to yesterday's trade, Monday. So have a look. Monday starts here. Let me just go through Monday. Forget about today's action. We can look at that later. Right in here. And actually, I'm going to focus on the first half, then I'll zoom in. So here, if you look at the line at the bottom here, you'll see Monday starts here, right around 9:30, okay? Right here. And what you want to do is, you can wait a half hour. I like to wait an hour. So I like to look at everything here, or we'll use the first half hour, okay? You know, on the 1 minute for those of you, so you get maximum amount of time here during the day. Take everything from 9:30 to 10. So 9:30 starts over here, 10 a.m. is right here. You want to take the highest high and the lowest low during that time period. So you want to mark the high, and you want to carry that level across. So here's the high during that first half hour, and I'm going to mark this as the lowest point here during that first half hour, okay? And what you want to do once you get past that half hour is wait for either a move above the high or a move below the low. What that will tell you is that's where the bulk of the trading will usually happen for the rest of the day. It's not perfect, but most days you're going to see it work this way. And if I zoom back out, you're going to see that here's Monday, here's where it started, here's where the day is ending, a little past where we are. But you can see that once it broke above the high of that opening range, that's where the bulk of the trading remained. So if you break above the high, you're only going to look for long trades. If you break below the low, you're only going to look for short trades. Let me show you a few more examples. Let's look at the SPY. How many of you trade the S&P 500 futures, the SPYs, right? Let's go back to Monday here. Okay. Right here. This is all of yesterday. So we saw a big gap, right? Big gap at the open. Where's 10 a.m.? 10 a.m. is over here. So we can say that up here, that's the high of that half-hour range, and this is the low because it was gap. Look what happened throughout the day. Did the SPY break out of the highs? Did it break below the lows? No, it did not. There was nothing to do yesterday with the SPYs. Nothing, right? And this is a good thing. This actually keeps you out of those trades where you might have gotten in and probably taken a small loss somewhere because it was really a very choppy, very tight range after that initial gap. So it really works quite well. Let's look at, I don't know, Apple. How many of you trade Apple? Usually a very popular stock, right? Let's go back to Monday here. So it also gapped. Where's the 10 a.m. high? Right in here, okay? So there's the high. The low is down in here. It broke that high here and remained up there for the bulk of the day. Now, if you see it break up, okay, I'm not saying take the trade as soon as it breaks. I'm saying wait for a proper setup. So here when, you know, it moved from below the cloud to above with slope, let's zoom in to this area. On those pullbacks, there were your entries, okay? But sometimes what you'll see is it'll break above and then immediately break back down and actually break below the low. That is a very strong bearish signal. You'll normally see a sustained move below there, okay? Now, you can see today it opened and so far has been in that first half-hour range, which this was the low and this is the high. So far, Apple hasn't gone anywhere. We're out of that range today, okay? So a very, very handy tactic to use when you're day trading. What are some of the best stocks to trade? What I find is over $100, just because you get a lot of movement, and because I day trade with options. And so normally, if you're buying an option on Apple, for example, here, and you're trading on a daily time frame, and you want 60, 90 days out to expiration, even going 60 days, they're going to be pricey, right? Because it's an expensive stock. But if you buy 1 week out, even let's go 10 days, now they're much more reasonable. You usually be able to pick them up for $1 or slightly less. Okay, so that's the beautiful part, and you can usually get a very sizable move, excuse me, on a stock like Apple or Tesla, right? So let's have a look at Tesla. An option 10 days out on Tesla, still pricey, but you can usually go a little out of the money and pick it up for $3 compared to, if we were going out here, let's go out about 60 days like before. Now you're talking $15 to $20. Okay, much less expensive, but when you get a move, you get a move. You get a big move. Have a look at some of these drops, right? You get in here 340 down to 337. It's not uncommon. You get $10, $15 moves sometimes. All right. So they're really, really key. Stocks over $100. What I also find is that the hourly time frame works great with stocks over 100. So stocks over 100, hourly time frame, you get some real nice setups. Okay, it means you're going to have to hold the position usually about 2 days, 2 to 3 days. But look at some of the moves you get. Here we have Tesla moving from below the cloud to above. Okay, it pulls back. When it pulls back and everything goes above zero, and you have that dot there, okay, you get in. Even if we got in at the high up here, 322, right? It didn't take us out until this level, 341. So from 322 to 341, right? That's what I'm talking about. $15, $20 move. When you can pick up an option for $3 and you get a $15 to $20 move, this is how the math works in your favor. Because if you get stopped out, right, the max you can lose is $3 if everything falls apart, right? And that's not usually the case. Usually you'll get stopped out and sell at a loss, but you don't lose the whole thing. But when you're making 15, 20 when you win, and you're losing less than 3 when you lose, that's the kind of math that really works in your favor. All right. So those are the things you want to look for. Now, again, it doesn't matter what time frame. It doesn't matter what you're trading. You can trade futures. Let's look at gold, right? It doesn't matter what time frame. Let's go back to 5 minutes on gold. There's opportunities. If I zoom in here on any of these. Now, remember, you want to focus on the areas that are trending, okay? Sure, hindsight's 20/20, but we're not talking about that. When you bring it up a chart, you're looking at the far right, and you're immediately identifying whether or not you have trend and whether or not you have momentum. So right now, what do we have here on gold? We have price and the moving average below the cloud. That's a downtrend. Do we have strong momentum pointing lower? We have some momentum. It's not that strong, but we do have some slope downward. Okay, so we'd only be looking for a short setup. Okay, so we're not going to get in to these areas where you see it go sideways and choppy. We're going to focus on the ones that are trending. Always, always, always. Your biggest check mark should go beside the item that says that the 20 is sloping in the direction of the trade. That is super, super important. Okay. Without that, it's going to be very difficult for you to succeed. Okay. You want to pick the safe areas on the chart to trade. You want to pick the areas where the odds are stacked in your favor. So these indicators will help you stack the odds in your favor, but having a clear trend and having strong momentum on your side that's really what completely makes the difference here. Okay. Michael was saying, and Michael, it's great to see you back. Michael attends a lot of our presentations. Welcome back. Michael says, what's best to focus on in a scan to find prospects? Here's the thing. ATR, you can scan using ATR, which is an average true range, okay? Because especially if you're trading on a 5-minute or a 1-minute, for example, you want stocks that are going to move. You don't want a stock that has an average true range of 5 cents, meaning, you know, on average from high to low, each bar is 5 cents. You want something that moves. And usually those stocks that trade over $100 are going to have, you know, $1.50, $2, $3 of an average true range on those time frames. So they can really move. You can focus on that. But one of the things I'm going to say is I'm going to give you a little homework to do. And this will pay off in spades for you. Forget the scanners. Come up with a group of stocks you like, and you can choose, you know, something as simple as the Dow 30, okay, or NASDAQ 100 list, S&P 500, and just start at one end and just start flipping through and identify those areas or those stocks that are moving from one side to the other of the cloud with slope. Have a list for longs, have a list for shorts. Moving from one side of the cloud to the other with slope. You know that there's a high probability that the next pullback is going to be a fantastic trade. And if you build a watch list full of those, it's going to keep you very active. Okay? So that's how you can do that. Now, I'm almost out of time. I do want to say that there are ways to actually make this better. And what we've done here is put together a pro training class for you on this, where I go and to get to this page, excuse me, just go to tradingwins.com/DT, short form for day trading. tradingwins.com/DT. What we're going to cover in this on-demand recording is I'm going to go through those 4 specific keys to day trading success that I touched on during the slide presentation in a lot more detail. I'll tell you exactly what you should be doing for that. I'm also going to show you a way to easily calculate and only make sure you're trading with the proper risk-reward ratio. You always want a much greater reward than what you're risking. And I'll show you exactly how to compare one trade to another like that. I'm also going to share my watch list with you of stocks that I like to day trade. So you'll walk away with that. And we'll also talk about the best time frames and trading on multiple time frames, how to do that with this strategy. And we'll also talk about some powerful techniques as far as using options. Okay, you can really leverage this with options without taking a lot of risk. So that is the key. If there's any reason why you would want to take that, it's this point right here. Now, as Renee said, this is the last presentation or event for this year. We wanted to do something special for you. So we've made it a no-brainer, only $3. Again, there's a lot more content in here than $3. But we're doing it because I think 2018 is going to be fantastic. And I also want to let you know that with this, we'll throw in a 30-day membership to our pro service for all of you, so that if you have any follow-up questions, you can join us. With the pro membership, you're going to get nightly videos 5 times a week. That's also where I share my trade ideas. But more importantly, you're going to be able to join us twice a week live, every Monday evening and every Thursday morning. You come into our room for what we call our live market chat, and you can ask me any trading related question you like. We also have what we call a course of the month for our pro members, which is a course at no extra cost every month. So you'll be getting 30 days free. So tradingwins.com/DT. You get everything in here for just $3. I want to thank all of you again for joining me here. It was a pleasure to be with you.